If you've seen any of my trading videos, there's a good chance you've heard me say we want to be predictive in our analysis and reactive in our execution. If you're new to trading, there's also a good chance that you have no idea what the hell that means. What that statement means is that as traders, we just don't want to blindly jump into opportunities. We want to perform analysis. We want to make predictions in the market based off different scenarios. But more importantly, we want to wait for the market to give us a signal that it's more likely to do this or it's more likely to do that. In today's video, we're going to look at a live trading example brought to you by one of the members of our live room, where price was coming to what I consider a decision point. And what I mean by a decision point is a point in the market where, well, it's going to have to make a decision. It's either going to hold and go up or break through and go down. Which one? I don't know, but I'll show you exactly how we analyzed it. That way we're ready for whatever the market throws at us. Let's go through our magic. Insert game show music. Today's four-step process is the same as every day. IPDE, yay! Right? So identify, right? Let's identify. What do you guys see? I like to draw out straight lines where price is at to help my eyes see where price is at. So when we go through our first process, identify. What do you guys identify? Type it in. What do you see? What has price action done? Where is price action at? Those are the two questions in our identification process. What has price action done? Where is price action at? This should be an easy one, guys. So price action has moved bearishly, right? Doesn't mean that we're going to move bearishly. And we are trading at a level of structure, right? So we are at previous structure support. All right, so based on what we see, because we are at previous structure support, what prediction can we make? And understand that your prediction will have a lot to do with what type of trader you are. But what prediction can we make? This is going to be a decision point, so we can say we're at a decision point. So two things are going to happen at a decision point. We're either going to hold, right? Price action is either going to hold that structure, which would give us a sign for a potential reversal, or price action is going to violate structure, which will give us a sign for a potential continuation. Does that make sense? Those are the only two options. We technically could go sideways a little bit, but then eventually we still have to hold or violate. Right? So those are our two options. If we hold level of structure, then we can look for a reversal, meaning a bullish opportunity. If we violate, then we can look for a bearish opportunity. So it's at this point in time where you now need to understand what type of trader you are. This is very important, right? You need to understand what type of trader you are. Because if you are a trend continuation trader only, are you looking for the hold of structure or the violation of structure? What would you say? You are looking for the violation of structure. So let's work on that one first. Okay. So we're coming down to our decision point where a decision must be made. So if price breaks and closes below structure, so violates structure, then I can predict a continuation lower. The next part of our prediction is if I'm predicting a continuation lower, then where is price likely to continue to? And this is our higher time frame, so we can't go out to another one, right? So let's zoom out some and ask ourselves, we may need to go out. Where is our next level of structure? And we probably do need to go out to, here we go. Where's our next level of structure? There's a little outside wick right here, which I do want to, this is going to be important to pay attention to. Let's make this a different color. And our next level of relevant structure is going to be right in this area. Let's call it 201s. So 201s, right? So going back to reality, we have a few choices here, right? If we violate this level of structure, the next level of structure that we have, we're still in a structure zone, right? So the way I would look at it is this. Not only do we need to violate this level of structure, I wouldn't feel comfortable if we move down to 201s unless we violate that second level of structure. That's just how I would personally look at that. So I would say if we violate this lower level of structure, because this is a underlapping level of structure, then I can predict a move down to 201s. And now the next step is understanding, okay, based on my rules on how to trade, how can I get involved in that move? Am I waiting for a breakout and then selling right away? Do I need a pullback and then sell the pullback, right? That's going to be up to you as a trader, all right? Does that make sense from the short side of things for a bearish continuation trader? That's one half of the show. Let me know if there's any questions about that. Perfect. All right. So now the other scenario, let's rewind. That's my rewind sound, right? If you are a counter-trend structure trader, you're saying, okay, well, if we hold this level, then where is your prediction of where price is likely to counter-trend to, right? Reverse to. What would you guys say? I think this is probably one of the easier ones. Anyone looking at a retest of the structure shelf right there? So as a structure-based counter-trend trader, you're saying if we hold this level, then my prediction is a move back up to this zone or whatever zone you've marked off as your relevant zone. And then the same question that you had as a short trader is you're asking, okay, what do I need to happen, right? What is my specific reason for entry or sign that needs to happen in order for me to take advantage of this opportunity? Can I just enter at market if the bar closes? Do I need a higher high, higher close? Do I need a 3-bar reversal? Do I need a double bottom? Do I need to go down to a lower time frame? Am I allowed to go down to a lower time frame and look for a different reason for entry? So boom. And I would say this, if you are a trader that can do both, if you can be counter trend and trend continuation, what do you do in this situation? We had our bearish prediction for TCT. We had our bullish prediction for CT. What if you're someone that does both? What if you're allowed to be a trend continuation and a counter trend trader? You are a shameless mercenary in this market. You don't have any bias. The only bias you have is what move puts money in your pocket the quickest. That's how Cody is, by the way. Cody will be short one pair 1 minute and then long the next minute. Cody, weren't you short? Yeah, I was. Not anymore. Cody's out there in the war, like fighting for one side, and then immediately like takes off his uniform, puts on like a soccer penny, and he's on the other side now. He's one of those guys. Both sides. But what do you do in this situation, guys? What do you do in this situation? The answer is nothing different. You wait and see what signal the market gives you, right? The market's going to tell us whether we're looking to get bullish, whether we're looking to get bearish, right? We went through that if-then syntax. The market is going to tell us, right? What did we say? If price action holds, then look for entry reason and look for this. If price action violates, then look for entry reason and look for this. We don't have to make a decision now. Our decision is to sit here, hands on underneath our tush, so we don't do anything dumb and take trades, and we wait for the market to give us a signal, one way or the other. We know what our signal is in advance. We're rules-based discretionary traders, right? Again, referencing back to the Q&A session, which I hoped all of you watched. We wait until the market shows us the sign that we require per our rules. And then we either take the trade or we don't take the trade. If we get the signal, we take the trade. If we don't get the signal, we don't take the trade. In the meantime, yeah, you draw out your kill zones, you predict your targets, you visualize and walk through your trade scenario. That way you make sure all the details are in there. You make sure you don't pass over anything. You make sure you calm yourself down so you're not nervous and you don't feel like you're rushing and you miss it. You do all of that outside of trading stuff. But now we just wait, right? We're looking at this candle right here. It's 9:23, guys. Guess what? We got 47 minutes until this candle closes. No, 37. Sorry, bad math. 37 minutes until this candle closes. I can't do anything. We're not going to know anything for the next 37 minutes. In 37 minutes, we'll know if we hold or if we violate. And then we'll have to wait another hour for a next signal. So this is why you do your analysis in advance. You plan out what side you want to be on, or if you're on both sides, you plan out the appropriate scenario for both sides, and then we wait. Now, waiting can be frustrating because if the markets start moving and it starts going straight down to your targets, it feels like you get the FOMO, you feel like you're missing out and you want to get involved. And that's where psychological discipline comes in handy, which most traders don't have, which is why most traders fail. But we're better than that here. This is tier 1 trading, guys. This is why we work on that stuff. This is why we have those private sessions. This is why we bring in people to teach you about yourself, to stop you from hurting yourself. This is why you don't skip over those lessons. So we just wait. Cody says, sometimes sitting on your hands and waiting is the best trade you can take. Learn that from someone speaking. Who is this someone, Cody? Who else is speaking? Who else mic is on? Oh, me. Oh, yeah. I say cool stuff sometimes. Yeah, I've saved plenty of, trust me, from someone who had a problem of not waiting for signals and taking trades, only to learn that, man, although I may not make money by missing a trade, I can lose a lot of money by taking a trade that I should have missed. I have learned the power of addition by subtraction. Wait for your trade. After all, it's the thing that we tested to ensure that's profitable. And if we don't wait for it, we're just reckless gamblers. So, yeah, good stuff right there on Pound Aussie. I think it's good on both sides. I think it's a good buying scenario. I think it's a good selling scenario. Again, the only thing with the sell is I would wait for this lower level, this sneaky little lower level. I would wait for this to be violated for a true tell. So I'd be a little bit more patient and wait for that to be violated. Because I can see us closing below here, baiting some traders to get in, and then holding that previous spike and rallying up. Hope you enjoyed the video. Any questions or comments, leave it below. Like, subscribe, all that good stuff. Also, live 3-day online trading workshop, end of November. Registration link is in the description box below. Register now. Don't wait. Limited seats. You will not make it in if you wait too late. And yeah, that's about it. Until next time, plan your trade, trade your plan. Take care.